Joining me now is Debashis Dey, partner at Clifford Chance in Dubai. Debashis, welcome.
Thank you.
At the beginning of the year, IEFI reinforced its criteria for a Sukuk. What impact do you think this is having on the market?
Well, I think the most important thing to think about is you need to fundamentally re-examine what IOFI is. IOFI is an accounting institution for Islamic standards for financial institutions. And one of the challenges is, how do you apply standards that are really for Islamic financial institutions to corporate Sukuk, which is the bulk of the Sukuk market? Now, most corporate issuers follow some form of local GAAP for accounting. They follow IFRS. And they have very, very different financial needs than an Islamic financial institution. I would say that the ruling, which was really just a confirmation of what had been said before and perhaps a desire to create clarity, still leaves us in a very similar position, which is there are two opposing approaches to Islamic finance currently. There is a desire to do a more pure aesthetic form, which is IOFI. And then there is a completely different desire, which we'll touch on a little bit later when we talk about equity financing, which is led by a desire of both corporates and Islamic investors to find a fixed income type instrument. IOFI has not answered that.
Do you think, therefore, it has confused the issue?
I don't think it's confused the issue for most market participants. I think they were already alerted to this issue some time ago. You know, we can go back to February 2008 and the initial discussion, which was an off-the-cuff remark. What is interesting is there's still some confusion, and there was not a clarification in that statement about what the off-the-cuff remark was made about Sukuk not being compliant. My recollection of the exact comment was something like 70 or 80% of Mudaraba Sukuk are not compliant, not 70 or 80% of Sukuk are not compliant. And actually, when you think about it in that way, IOFI was not actually saying the vast majority of Sukuk are not compliant. IOFI has come out and said one important thing, though, is they're not saying things are bad. They are just giving a set of accounting and guidelines, I think, which they would like everybody to aspire to.
What are the legal ramifications for those transactions that no longer adhere to the new definition of a Sukuk?
Well, whose definition of Sukuk? Again, I need to go back to what IOFI is. IOFI is an accounting standards organization for Islamic financial institutions. It is very persuasive. But the same answer is, if you are a corporate, what rules do you comply with? You need to comply with your accounting rules. You need a fatwa from the scholars that have advised on the transaction structure. You need legally enforceable documents. You need to comply with the local company's law of where you're based. You actually don't have any requirement to apply IOFI to your guidelines. In fact,
so for the vast majority of issues, it's an irrelevant.
It's an irrelevance, other than it's a very important set of rules that are discussed by a lot of people. But it's not applicable as a terms of law. So for the vast majority of corporate issuers out there and Islamic investors out there, yes, this caused some discussion. Yes, it causes some confusion. It certainly caused some conservatism on the new structures that should be done. But it didn't change the fact that Sukuk remain enforceable contractual obligations.
But as you mentioned, one of the consequences is it's placed greater emphasis on equity-based financing. How big an issue is that for conventional investors in particular who want access to a fixed income instrument? They don't want access to an equity instrument.
Well, I think to distinguish what you just said, it's not conventional investors, it's Islamic investors that this has a big impact on. Islamic investors already have the choice to buy equity in Islamically compliant businesses. So if they want to participate in the volatility of equity, they can just go buy stock. The UAE, the GCC generally, they have very well participated in stock markets, which are highly volatile. But you can participate regularly as an Islamic institutional investor or as an Islamic retail investor. The challenge is that the vast majority of Islamic institutions who were buying Sukuk did not want equity volatility. What they wanted was more of a fixed income type instrument. And that gap has not been bridged. Yes, and we heard earlier today in some of the sessions that are being held at the conference, a re-emphasis of Sukuk is equity-based. I hear that, but the desire of the investors, the very Islamic people or institutions who are buying these instruments, is different. They want some other different risk profile.
Moving on, in terms of the development of Sukuk market, one of the drawbacks at the moment is there isn't a developed secondary market because there isn't a true sale securitization market and infrastructure there. What developments are we seeing legally to develop a true sale securitization market?
Yeah, let's separate the 2 points you just made. There is an issue about liquidity in the aftermarket for Sukuk, but that's driven by 2, I think, issues. The first is that traditionally the purchasers of Sukuk like to buy and hold. They buy and hold because, surprise, surprise, these are like fixed income instruments for them, short-term maturity, between 3 to 4 years. It's actually an ideal place to put your money and get a good return and put it in a safe place. So they don't want to trade. We think you can foster greater liquidity if you can have the central banks in the region participate in repos and other type of approaches to liquidity management similar to the bond market.
But one of the drawbacks still is that there isn't a developed securitization market.
Well, that's a separate question. Securitization, and I really think it's a great product, and I actually think it's a product that's not going to go away because it disintermediates risk from investment banks who arrange the transactions to the investor market, is far more of a risk sharing than Sukuk have been to date. It requires a more profound use of legal technology than most people are used to because, of course, you have to get into the issues of bankruptcy, legal environment, impact on accounting, selling of assets, and it has a cost and timing implication that's more complicated.
And what on the legal aspects of it, what develops are we seeing, particularly in GCC countries?
Well, I think there have been some approaches or some desires to try and develop frameworks for it. I know that I think Lebanon had passed some securitization legislation. The DIFC, the Dubai International Financial Center, which is effectively think of it as an offshore legal center in Dubai, have actually specifically passed laws to help assist securitization. But the reality is it would require a wholesale change of things, of more sophistication in bankruptcy, more sophistication on transparency, more sophistication on data collection, etc. That hasn't happened.
And what are the consequences therefore of that if we start to see potential defaults in the Sukuk market, the fact we haven't got developed bankruptcy codes, we haven't got developed legal systems?
I think that is going to be the big challenge. I think for us, whether conventional or Islamic, the next 24 months should be very interesting. This is a time where, on a boom, I think most people tend to ignore these questions. I think at the bottom of the cycle where we're heading, one of the big issues will be how do you restructure Sukuk? More importantly, if an obligor in a Sukuk structure defaults, what does that mean for the investors? We know that the structures are designed right now, unlike securitization, they can't take the assets. Therefore, they only have really what is analogous to an unsecured claim against the corporate obligor. What does that mean? In the Middle East, there have not been large-scale bankruptcies, and yet we're seeing in Kuwait these investment houses having huge difficulties on default. To date, we've avoided all these questions because behind the scenes, these issues have been sorted out, never in the public light. But maybe we're going to have so many of these issues that we'll have to have some root and branch reform, some change. We certainly have seen some recent activity around Tamwil and Amlak, two mortgage finance, Sharia-compliant mortgage finance providers in the UAE. Yet we still haven't seen a restructuring solution, I think because people are just realizing how complex it is.
Debashis Dey, thank you very much.